This is Millennial Money Mindset. If you want the fruit, you need the roots. Chart patterns that make you money. So this is what we're talking about today. Chart patterns that make money. So we're going to talk about what they call technical analysis. So technical analysis is a bit of a dark art. So there's not much evidence. There's not much. So if you look at the academic research on technical analysis, there's not actually that much. If you look at some of the studies that look at fundamental analysis, you can go back to 1700 and look at kind of some of the research that's been done on this. So this is a bit of a dark art and it's not for everyone, so bear with me on that. And it's also more about trading. So we've talked in other videos about the difference between trading and investing. I'll put a link to a video up here about how I'd explain like trading is like rugby and investing is like football. So they're very different. This is very much trading. So you're looking at day-to-day patterns. So all you're looking at here is you're getting data that's been put into a graph. So every graph is just a part of data. And essentially you're looking at different patterns and trying to spot trends in the market. So it's not, as I said, it's not 100% scientific. It's pretty much, you need to use your intuition, and you have to use, it's a bit of guesswork, but really it's just an additional bit of information that's going to help you decide on your trading. So this is essentially, I would think of it, come back to the three things. So look at why are you looking at this market? So look at markets rather than individual stocks. Then look at the fundamentals, things like price to earnings, looking at actual different kind of the fundamentals. How much is that company making, or how much is that making? And then thirdly and finally, then you use technical analysis. So essentially it's just an additional check to use to help your trading. But people use technical analysis, purely technical analysis. They don't even look at the stock. They don't even care if it's a car stock or if it's a renewable energy stock. All they look at is the chart patterns. And this is just different techniques for different people. Some people are very visual. I am quite a visual person, so I find technical analysis really useful, and to spot trends and to see where things are moving. So I learned this on the trading floor. So I used to trade gas for a FTSE 100 company. We mostly use fundamentals, so we use essentially data, hard data. We use numbers and facts, but we did use technical analysis quite a lot as a kind of a supporting evidence. So I'm going to go through 6 patterns that constantly make money. So it has been evident. There's a number of different traders out there that use this all the time. Check out my podcast. I've interviewed traders and they give away their secrets, and we're going to go through these 6 patterns that are going to make money. So let's go through those patterns. Essentially, support and resistance, trend lines, double tops, double bottoms. Then we're going to go through moving averages, and finally, and the most speculative of them all and the most controversial, Fibonacci patterns. And I love Fibonacci patterns, and I actually talk about them in my book Millennial Money Mindset. And we're going to talk a bit about Fibonacci and how interesting they are in kind of mathematical patterns. These are fascinating, and so stay right there. Stay right to the end, because we're going to give away what they are, the secret, the golden secret of all of trading. And this is what many of the trading systems are built on. So I did an interview with a podcast with Trade the Easy Way, someone who started that business, and essentially this is what he revealed in that podcast. So stay right to the end and we'll reveal that secret here. So let's get through it. So support and resistance. So what all support and resistance are. So imagine patterns move up like this. So why? Let's actually go through the why. So think of physics. So think of back to your physics lessons with Newton's, and think of the laws of motion. So everything works to physics. The universe works to certain laws, and there are certain laws, natural laws, that the world works to. So if you think of the 3 laws of motion, so inertia, then momentum, then every action is equal and opposite reaction. So essentially this works in trading as well. So if there's momentum, if a stock has momentum behind it, then it's going to keep moving. So, or if a stock is stuck in a rut, it's going to be much harder to move than if it's got kind of energy behind it. And then every action has an equal and opposite reaction. So every bit of news, every bit of information in the market will have a certain amount of a reaction. So recently, Elon Musk went out and said something about Bitcoin, and that action had a different reaction. So every certain bit of information, every point in the market is an action and a reaction. If you think of it like that, that might sound a bit strange, but that is kind of how I think about it in my head. So it comes down to essentially physics and how things all work in the market. So what are support and resistance? So essentially you've got resistance is like a ceiling. Think of it like a ceiling, and then support is like a floor. And essentially a stock will find a natural point where it won't go above a certain amount. So with the FTSE 100, sometimes that's like a 7,000. So it won't go above 7,000 for ages, and this is essentially the resistance. So it will keep trading, but it will hit a ceiling all the time, and this is support. This is resistance. So you can look for these in your trading. So if you look, I should say also, you can find all these patterns. I'm using a whiteboard here just because I find it easier, but just look on. You can look any site like Google has a good price data for free, patterns for free, chart patterns for free. I personally use Yahoo because that's what I started out many years ago using, and that you can use that for free. It's really good. Or if you use a broker site, so if you use, when you buy and sell your shares or commodities or whatever you're buying, a number of those have some good packages and they give those away for free as well. You can also get some much more sophisticated chart patterns, and you can pay lots of money for these packages. To be honest, I think Yahoo or Google are if you're just starting out, just start using those before you pay for any expensive chart patterns. So I work for a FTSE 100 company. They had the high tech patterns, and you can play around with this all the time. And I was a financial advisor as well, and there's a number of different really good packages out there that you can, I love. I can spend days immersed in analysing these different companies and the different patterns and things like that. So I love doing this. But if you're starting out, I still use Yahoo today. Don't spend a lot of money on these packages until you're actually making money. So, and there's a lot of adverts out there that are going to tell you that you're going to make millions by having these specialist packages. Start out with the basics and then work your way out from that is what I'd say. So coming back to support and resistance. So think of it like a floor and a ceiling, and a price will hit a ceiling all the time until it, and once it breaks through that ceiling, then it has energy to go through that. And what you'll notice as well, just start playing around, having a look at the FTSE, look at the oil, for instance, or kind of well-traded commodities. So things like gas, oil, gold, silver, and you'll start noticing different patterns. And you'll notice ceilings here. So if you'll get a ceiling here, that would form, this ceiling here will form the next floor. And you'll notice these patterns, and they're quite interesting, spotting these. And it's also human psychology as well. So when we mentioned the 7,000 with the FTSE 100, quite a lot of traders have set their stop losses to which are stop losses where it automatically sells, or so it will hit this point and then it will sell automatically, and you'll start noticing that. So number one, support and resistance, and you'll notice these. It's just quite often a price won't go above a certain ceiling, or it won't go below a certain point. And this might be the psychology. This might be, traders love round numbers, so it's quite often a round number. So like 7,000 in the FTSE, or different prices for. I used to trade gas, and it always used to be 60 pence a therm. It would never go above 60 pence a therm, and for whatever reason, you would never break it. break past this point, but once it breaks through it, then it tends to have energy and it goes right through it. And the longer it takes to build through this ceiling, once it does break through the ceiling, the higher it's likely to go. And that's the kind of energy behind it. So number one, support and resistance. So number two is trend lines. So let the trend be your friend until the bend in the end. And so what are trend lines? So essentially these are channels. So they're slightly different, but then they're quite the similar same. So prices move in trends. So they will keep moving up. It will keep moving up, and you'll see these trend lines, and it will bounce above these support and resistance lines. And it's just a trend line is just a number of different support and resistance lines, and you'll see these move in channels. And you can, if you get a really predictable stock or commodity, you can actually spot these trend lines, and then you can buy at one point and then sell because you know it's going to go down, and then buy again, and then you will just follow up the buys and the sells. It's easier said than done. I say this as it's so easy because if you actually look at the statistic, 70% of people lose money trading. So I've done videos in the past of not to trade and to invest. If you do want to trade, it's much more speculative. So this is guidance, not advice. Do your own research. Yeah, before I kind of do any more. So yeah, so number two is trends. So trend lines, and you also have reversals. So you'll see where it will essentially hit this point, and then it will reverse down, and then it might have a different trend line going down. And it's trying to spot these trend lines is the kind of the $1 million question. Where do these reversals happen? So that's essentially building on from support and resistance. So then double tops double tops essentially are where you've got two tops here. So you'll see 2 times where it's 2 tops like that, and this indicates, so it will look like an M, like a giant M is a double top, and this signifies the top of the market. So this is where you want to be getting out. So this is a double top is M, think of it like M for murder is how I always remember it. And if you look at the FTSE 100, there was a massive M shape, or there still is a massive M shape. And so it looks like there could be a massive reversal. But what happens is that you can never predict, just because it's showing in the trends, it doesn't mean it's going to happen in reality. So what's happened in the FTSE, there's been loads of money printing. So if you look at money printing, so the Bank of England have printed loads of money, and that's meant that the fundamentals have gone out the window, and the technicals have gone out the window. So it's not always, as we said at the start, it's not always a scientific certainty. This is it's a dark art, and it's really just a guidance to help you with your other fundamentals or other sound investments. And it's trading, not investing. So so that's a double top, which is the M, and that signifies the top of the market. You'll get a double bottom, which is here, and that signifies the bottom of the market. And I think of that like a win. So think of it like a W for win, and essentially it means that they're testing the market, and it won't. This floor here has held firm. So essentially it's testing this, and this essentially this floor is held firm, and then the longer it has taken to reach this floor, the more likely it's going to go up again. So that's a double bottom. And think of it like a win, a W for win. So you've got M for murder, which signifies the top of the market, a double top. Then you've got a W, which signifies a win. So a double bottom is a win for, and that shows it's going to be these are showing reversals, and this is essentially going to mean it's going to start another bull run. So then the next one is moving averages. So what is a moving average? So essentially it's just the average of the price. So what you can do, you can essentially look at different daily averages. So, and you can do this automatically in Yahoo or Google or your broker's site, and you can set your moving average to a number of different points depending on what you're analysing, what fundamentals you're looking at. So it's essentially just the average of the last few days. So you do a daily moving average. You can do hourly averages as well, but I wouldn't necessarily. That's getting way too deep into kind of you're looking kind of at the market with a microscope. So I used moving averages, daily moving averages, and a good one to use is a 200 daily moving average and a 50-day moving average. And essentially you can see the momentum. That's essentially what you're looking at, is the momentum in the market. So is the 200 daily moving average less than, you might have had a less than that 50-day moving average, and then essentially what will happen is you get these two moving averages, and then you'll get them to cross over, and then it basically signifies what you call a golden cross, which means is it going to go up, and then or you get a death cross, which essentially means the market's going to go down. So what I use for the FTSE 100 is 200 daily moving average and 50 daily moving average, and essentially you're looking for these crossovers, and essentially that's where the moving average the 200 daily moving average crosses over the 50-day moving average, and that either going to signifies it moving up or it's going to move down. So most of the time they run parallel to each other, these two moving averages, and then if they cross over, then that signifies essentially a change in the market, and that's what you're looking for. And then if it's a death cross, where I think it is the 200 daily moving average goes over the 50 moving average, then that's a bad sign. That means that's going to be in a bear market. And if you have a golden cross where the 200 daily moving average move over the 50-day moving average, then that's a golden cross, and that means it's going to signify a bull market, which means it's going to move up again. So that's moving averages, and you can play around with. I use a 50-day moving average and a 200-day moving average just because that's a good one to use. You can play around with different ones, and there are other traders who use different moving averages to me. So the final one is Fibonacci Patterns, and so this is the one I was going to reveal which I said I'd reveal at the end of at the start of the talk. So what is Fibonacci? So he was an Italian economist in, I think, the 13th century, and essentially he spotted these patterns in nature. So he spotted, it's a mathematical pattern, and essentially he spotted that things like, if you look at sunflower seeds, if you look at petals in a rose, and you look at, or even if you look at beauty, so if you look at a beautiful person, they will have these Fibonacci patterns, and it's a sequence. So it's where the previous two numbers add up together will add up to the next number. So for instance, when the Fibonacci pattern is 1, 1, and add those two numbers up equals 2, and then the next number in the sequence is 1, 2, adding them up together is 3. Google it, it's fascinating, these patterns. And essentially these patterns are everywhere in nature, and we talk about this on my podcast, where I interview a trader who's created this company called Trade the Easy Way, and he talks about this is the secret to trading, and a lot of the trading software are built on these Fibonacci patterns. And essentially you can use this for your trading, and this is more sophisticated trading software, and it can pick up these Fibonacci patterns, and essentially you're looking for where these Fibonacci patterns are in, this basically shows exponential growth. So Fibonacci's Italian economist or mathematician used the example of these in rabbits, and essentially if you put two rabbits together, it will create three, the dad and the mum and then the baby rabbit, and essentially if you put them in a room, you get these kind of exponential patterns, and this is the same with trading and patterns. And it's fascinating, these patterns, and you can kind of find out more about this by doing your own research, but it's just an introduction to these patterns. So yeah, that has been an introduction to trading patterns. So yeah, as I said, this is trading, not investing. Please do your own research. Capital is at risk, and this is guidance, not specific advice. So I offer money coaching and offer where we empower you to make your own decisions with money. So let's go through those 6 trading patterns just briefly again. So support and resistance, this is your ceiling and your floor of your patterns. This is, then we talked about trend lines, so let the trend be your friend to the bend in the end. So it's much more smarter to follow the trend lines rather than trying to predict where it's going to break and you're going to find a new bear market or bull market. It's much smarter to follow the trends. Then, yeah, you're looking for those, follow the trends rather than the reversal or the break lines. Then we talked about double tops. Look for those, that M, and that means M for murder. That means there's going to be a change to a bear market where the market's going to go down. And then we talked about a double bottom, which is, think of it like W for win, and that's going to be the bottom of the market, and it's going to start a new bull market. Then we talked about moving averages. So we talked about a 200-day moving average using and a 50-day moving average, and you can play around with this on software that Yahoo, Google, or your brokerage sites. And we also talked about Fibonacci patterns, which are based in nature, and these are fascinating patterns, and these are essentially the secret code to trading. And yeah, a lot of the trading packages are built on these Fibonacci patterns. So my name's Neil Doig. If this has been useful, please like, please subscribe, and please tell a friend about Millennial Money Mindset. I do talk about trading patterns in my book, Millennial Money Mindset. If you want the fruits, you need the roots. And I talk about Fibonacci patterns and how they are based on nature. And funny enough, the back of my book is the Leonardo da Vinci. I almost said Leonardo DiCaprio there. Leonardo da Vinci, and that is based on a complete Fibonacci pattern. That's all Fibonacci patterns there. And his Vitruvian man, or basically the man he creates there, is all based on Fibonacci patterns, and it's kind of the secret code to trading, as they call it. And then I have a game called Millennial Football Formation Asset Allocation, and yeah, my company's called Money Tips, which stands for Tax, Investment, Property, Pension, Savings, and we're different. We offer money coaching. It stands for Tax, Investment, Property, Pension, Savings. And yeah, we're different. We offer money coaching. We empower you to make your own decisions with money, and by doing that, we can save you hundreds of thousands of pounds over 20 years compared to paying for a financial advisor, a FTSE 100 financial advisor. So yeah, please like, please subscribe. Hope that's been useful. Thanks so much.